The importance of correct entry points in investing. In the world of investing, it is crucial to have a well-defined strategy and a systematic approach to maximize profits. One key aspect that often goes overlooked is the significance of identifying correct entry points. In the next few minutes, we will discuss the importance of correct entry points in investing and how it can impact your overall success in the market. The problem with frequent losses. If more than half of your trades consistently result in losses, it is a clear indication that something is amiss. Many investors tend to blame the market for their failures, but the truth is that the problem lies within their own approach. Even if you were to rely solely on chance, flipping a coin would yield a 50% success rate. Therefore, consistently losing money indicates a flawed system for entering positions. The role of entry points. The concept of entry points refers to the timing of when an investor enters a trade. It is crucial to identify the optimal moment to buy a stock or asset to maximize potential gains. Failing to do so can result in buying at a price that has already factored in all the positive aspects of the investment, leading to a decline in value shortly after purchase. The impact of late entry. When investors hear about an investment idea and then take action, they often fail to realize that by that time, the market has already priced in the information. This means that the stock's value may have already reached its peak, and early investors may start selling their shares, causing the price to decline. As a result, new investors who enter late may experience losses or miss out on potential gains. The long-term perspective. To achieve success in investing, it is essential to have a long-term perspective. Consistently losing money due to poor entry points can hinder your ability to generate profits over time. By understanding how to identify correct entry points, investors can position themselves for long-term success. Improving performance. Improving your performance starts with recognizing the importance of correct entry points. By developing a systematic approach to identify optimal entry points, you can increase your chances of making profitable trades. This involves conducting thorough research, analyzing market trends, and understanding the factors that influence an asset's value. Conclusion. In conclusion, if more than half of your trades result in losses, it is crucial to acknowledge that the problem lies within your own approach, not the market itself. Correct entry points play a vital role in investing success, as they determine the timing of when you enter a trade. Failing to identify optimal entry points can lead to losses or missed opportunities. By developing a systematic approach and improving your ability to identify correct entry points, you can increase your chances of making profitable trades and achieving long-term success in the market.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.